Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So today, the futures were really positive. I think we're up, what, 6-7 handles or something like that. Actually, not like 4 or 5, whatever it was. You know, we opened up above the highs that we've seen over the course of the past few weeks. You know, we had that reversal November 16th. We've had nice commitment to that reversal. We've had big moves in leading stocks in different sectors across the board. And then every time you get a little long in the tooth, or every time in the oscillator, which came in a plus 60, you have to be a little, just a little hesitant chasing situations, getting overly excited, or excited. And when you trade above a prior high and then you come back below it, that means momentum's not ready to stay there. So if momentum leaves and you're trading a situation for momentum, you leave. If you're in it for a swing or you're in it for a macro trade, your time frame's different. But if you're like an intermediate trend trader that's been trying to hold 4, 5, 6, 7, 8, 9, whatever positions with a hedge around it, today, once we opened up, went below the prior high, closed near the lows, it's a day to just clean up some stock, a day to switch some gears. Doesn't say it's a game, meaning like it's game over. It's just one of those days where you're like, okay, let's regroup, let's see how things act, let's let the market prove that it can go sideways before it goes again, or see where we could potentially pull back to. So the oscillator went out plus 30. We still have a ways to go to get to neutral. You look at the chart here of the SPX, or we'll do the spiders first. We opened up above this level, right? Here's that level, above this key moving average, the 50-day, and we weren't able to hold it. It got rejected. This level rejected by the market. Doesn't mean game over. Look at the size of the move we've had since this outside day. But here you had an outside day, and we gapped up, saw commitment, and continued. So when you have an outside day on the opposite end, you take notice. If you look what happened here on this day, okay, it led to a gap fill, and then we reversed and continued. So you can't just say it's game over because you have an outside day. It's just a day that says, okay, we're coming back into resistance. We pushed through, the market wasn't ready. It's time to pare down, maybe add some hedges. So for those that said on this day that this was it, game over, this was just an oversold bounce, they got squeezed a little bit higher, all right? But you could have also sold here, and then waited for that down move to get reversed and rebuy it back, and then you have a new area to trade against. So here we are, higher from a higher level, and as of now, we close on the lows after making a new high. This is an outside day, a day to take notice, a day to see, do we fall apart and just not have any dip buyers, or do we come in and test halfway into this range and then go a little sideways and hold and continue? You put your Fibonacci retracement in here, which we did the last time, it makes sense to do it again. So you can write down levels. And this time it's from a different area, okay? Here is, from low, right, to the high, all right? You have 25% Fibonacci retracement for the spiders is 140.92. This would be a good area to see if we could hold. And then you also have your 0.382 at 139.83, which would definitely shake things up a bit. So at this point, can we see this area, 140.92? I think the probability is pretty high. But can we see it and also rally on afterwards? Yep, that's only the 25% retracement. If we don't hold the 25% retracement and we go to the 0.38 or even the 0.50, all it tells us is the speed changed. The pent-up momentum that we saw in this move from lows to highs is waning, okay? And that's what we're going to have to judge. So with that said, there were a lot of moves that took place over the course of the past few weeks. I know I felt a little off that I got out of my Google a little early, but now you look at something like Google today, shows you it needs a rest, that entries and exits matter. If you go to the chart here, you will see this was the day it woke up. This was 665-ish. This was your add day above 675. Hey, look what happened. A move right to, what was this? This was the 200-day, right? The 200-day in Google? No. It was, the 50-day. And we reversed. Does it mean it's going to fall apart? You don't know. But if you play it for micro moves, and this was a micro red dog reversal, right? Made a high, wound up touching resistance, and closed below the prior high. So it could lead to maybe a little bit of a move down to this area. And if you bought it here, added here, trimmed some, and got out on this day, you'll have the luxury of buying it back. If you chased it up into the 50-day, you're probably going to take some pain. So entries and exits matter. Same thing with Facebook. Facebook, for me, it was a really nice long. If guys in the virtual trading floor saw, we started to focus on it right around here. This is where I was focusing on it, around 23.75, 24 and change. And you saw it green on my virtual trading floor during this entire move. So nice swing trade long. My objective was to fill this gap. I think a lot of people probably started shorting it right around there, and that's what that extra squeeze was. I talked about selling it. Guys saw it leave my virtual trade floor almost pre-market. If you come back to me, for me, I was like, you know what? I'm out, but it doesn't mean it's a short. And I said it, we typed it, so everyone said, oh, Red Dog's virtual trade floor now shows no Facebook position after having it for 5-6 days, giving everyone conviction to stay with it if they wanted to. That's why the virtual trade floor is there, to show you us involved in a trade that we talk about as a strategy, and then when it changes, we change. So with that being extended, got out, but then later in the day, after a squeeze, I'm like, you know what, this to me feels as if we can have a Red Dog reversal the other way. So I got short. Guys on my radio heard me say, okay, right around here, 28.30, I was short. Sparling was long. Everyone's like, how could you guys be on the opposite side of the trade? We're all different at different times. And then he got out, and that's why it was good that we were helpful for each other, and he got short. And lo and behold, the pattern triggered. Different way. If you go back to the chart, you'll see this was the pivot right here, right? This was the prior high. So it pushed through 28, went as high as 28.88. Once it came back below it, you could have maybe cheated a little bit, but a lot of guys that cheated during this whole time period got squeezed, got short a little bit beforehand, added or did it at 28 with a stop there, and here was your nice close. So with that being said, you take some off into the close because it's a nice cash flow trade, and then you trail some, and I would say that, looking at this chart, why can't it come in and test 26 to 26.12, and that would be an area that you can cover your remainder that you're trailing, and then perhaps look to see if we could buy a dip here. Big move. If you want to go Fibonacci retracements on this move, just so you don't feel spoiled, if you look where this move really started to the high, okay, the 25% fib, it comes in right around 26.49. So it could be super duper duper strong still and still pull in another, percent or so. Okay, and then it could even go to the 0.38, 0.2% retracement, which is below what I just talked about around 26, and still be strong. So move, pull back if it wants to continue. So you don't chase. And if you want to go a step further here, look at just the intensity of this move is so strong. And then you go up here. I think there might even be another short trade. If it were to open up a little bit tomorrow, I think some people will be shorting it through the low of 26.98 for continuation. But anyway, it just shows you how you need to use technical analysis, and there are times and places to get excited from a long side, then to trim some and trail some in this little spot. It turned out to be a good sell spot and a decent short spot, and now we'll see what kind of pullback we have. But hopefully you are a buyer in the base, ready to clear resistance, versus a buyer into the excitement, because I think everyone on TV started getting really, really positive on Facebook, whatever. That always has to get you a little cautious. Or a lot of people. I can't say everyone because that's uncompliant. Some people. And all I know is now this is a day to take notice. Who knows? Maybe it leads to nothing. Maybe it opens up, goes sideways for a little bit and continues. But in my experience, this type of day after a big move should lead to some type of action towards, closer to 26. So that's why I stay with some, and that's why it's red on my virtual trading floor. All right, that's what the virtual trading floor is there for. I'm sorry, in the Twitter sphere, I can't tell you every trade because I only have two hands and not only two thumbs. So with that said, it went from green for the past 5, 6, 7 days to nothing to then red. And that's what it's there for, to show some conviction in our ideas. It's not even timestamped because it's real P&L. So I don't know, timestamped. I don't know if that means they're really in the trade or they punch it on a piece of paper and say, this is what I would have done if I was trading real money. Who knows? For me, I'm a trader. I make the majority of my money as a trader, not from doing this video, not from going on CNBC. It's from being a trader in the trenches with you guys. So I feel the emotions, I feel the pain, I feel the excitement. I am there. Anyway, with that said, Apple opened up by 594-ish, which was a pivot. And I said, how we deal with 594 today is very important. Is it ready to clear to go to 605, 620, or where is it not? And Apple was rejected at that level right around here. Does this mean game over after a move from 522? No, but does this mean it wasn't ready to clear this area, wasn't ready to tag these moving averages? Yes. So now what I'm going to look at is I'm flat Apple, okay, because I got stopped out, I think 588-ish. And and I'm going to revisit. If it could hold above this 582 and hold in this upper end of this recent channel, perhaps it breaks above this 590-450 faster, or if it were to break this, then we see how it handles this 572, and that would mean that maybe the speed slows down. This pent-up move that we saw from the lows after a huge $200 move from 700 all the way down to this nice reversal pattern where we saw commitment and saw commitment. Now it's getting a little wishy-washy because bigger resistance is higher, but it just came a long way, so you have to be a bit more tactical. We'll see what happens. I'll be talking about this tomorrow. So unfortunately, or fortunately, I have to go. I got to catch a ferry. But just so you know, today was one of those days just to be a bit more flexible. Not to say I'm going, balls to the wall short. They've said that on TV, so I could say that in here. But a day to say, you know what, I'm going to clean up some positions that I'm not committed to, that I'm not in as a macro trade. If I was playing something for momentum, take that off, revisit. And if you were long and you were trimming and trailing, you're allowed to sell and you're allowed to trade for, a cute cash flow trade, which could always wind up being an inflection point. And right now, who knows what today's high in Facebook? Everyone's saying, oh, that was the high of the overall move. Now it's going to break the lows. You don't know that. Just push through, failure, big move. We measure. Right thing to do is switch gears, and right thing to do in this market area is switch gears to see what it leads to. And we'll have more tomorrow with Brittany at the morning call. So have a great night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.